Welcome to the second part on the stock research report on Glenmark Life Sciences. In this part, we will talk about the financials of the company. We will see the key ratios. We will do a SWOT analysis, strengths, weaknesses, threats, and opportunities analysis. And towards the end, we will see if this company is worth an investment. So let's start with the financials. So friends, the company's operating revenue has grown from rupees 886 crores in March 2019 to rupees 1009 crore approximately in March 2021. And its revenue has grown at CAGR of 46% from FY19 to FY21. And this is very good growth numbers, friends. Let's talk about operating profit. The company's operating profit has grown from rupees 248 crores in FY19 to rupees 590 crores in FY21. And its operating margin is at around 31%. Let's talk about the net profit margin. The company's net profit has grown from rupees 200 crores to rupees 350 crores between FY19 and FY21. And the profit margin stands at around 20%. And its net profit has grown at the CAGR of 34%. Let's check the balance strength of the company. The company's return equity is around 47% at the end of March 21. And friends, again, this is very good number. In terms of operating cash flow, the company's operating cash flow was positive in all the 3 years, March 19, March 20, and March 21, and it stands at rupees 388 crores. Now, why we are taking the figure from March 19? Because the company got separated from its parent Glenmark Pharma in March 19, and it came as a separate company into the existence. Now let's talk about the key ratios. The current market price is around 685. It is still discount of 5 to 7% to its IPO price of 700 rupees 20. The market cap is around 8,000 crores. So this is essentially a mid-cap company. The current PE is 23, and this is a very reasonable or an undemanding valuation. The 5-year median P is not applicable here because company got listed just last month. And the industry PE is 27. So the company's current PE is even at discount to the industry PE. The receivable days are 120, and it has came down from 182 in FY19. The 5-year stock price CAGR is not applicable here. The company's operating margins are at 31%, net profit margins are at 19%, and promoter holding is 82% without any promoter pledge. Return equity 47%, and current dividend yield is 0%. So friends, the positives are undemanding valuation. The company's PE is just at 23. Very good ROE, and the company has good future prospects because it is dealing in the non-commodity API business, and there is a scope to increase its CDMO business as well in future. Let's do a qualitative analysis of the company. Does the company has an identifiable consumer monopoly? Yes. Company is in a complex API. It's a non-commodity business with high profit margins, and company is having 16 out of 20 large generic global pharma players as its client. Definitely, company has an identifiable consumer monopoly. Do you understand how it works? Yes, we saw the company's products and services. What is the chance that it will be obsolete or replaced in the next 20 years? Friends, I don't think so. The API business, the company's expansion plans, and companies foray into new areas, new technology like oncology, peptides, definitely will help company to grow in future. I really don't think that this company is going to be obsolete in next 20 years. Does the company have consistent operating history? Yes. It was formed in 2001 as an API business by its parent Glenmark Pharma, and in 2019 the company became a separate company on its own. So it has definitely a consistent operating history. Financial performance. Company has good profit margins. Company has good revenue, and company's revenue is increasing at the rate of more than 30% for last 2 to 3 years. Company is having 47% of ROE. Company is a zero debt company. In fact, after launching of the IPO, company has paid around 700 crore to its parent, and it has become now a zero debt company. So company will be able to save on its interest going ahead, and in fact this will further help to increase the company's margin from current 31%. And is company's stock price suffering from a market panic, business recession? So friends, company just launched its IPO last month, and the current price is 5 to 7% discount to its IPO price. If you have seen in last 3-4 months, various companies have launched its IPO, and currently the prices are trading at a crazy valuation. Some of the company's prices are 100%, 150% more than its IPO price. And Glenmark Life Sciences, despite of having a robust business and robust fundamentals, is trading at a discount to its IPO price. So definitely it is available at an attractive valuation. So friends, we are now coming towards the end of the presentation, and we will see the summary of the company and do a SWOT analysis. So Glenmark Life Sciences is a subsidiary of Glenmark Pharma, and it was carved out from parent in 2019. It manufactures high complex APIs. It has 2/3 of the revenue generated from regulated market like US, Canada, Japan, Australia, and European Union. It has portfolio of 120 APIs. Company normally develops 8 to 10 APIs per year, and it plans to continue to do the same in future as well. It has 39 patents under its belt. It has 41 pending applications. It is spending approximately 2 to 3% of its revenue on R&D. And it derives 40% of its revenue from the parent firm. So this is one factor that you need to watch out. Company should diversify, and it should get more and more business from other clients. SWOT analysis, undemanding valuations. We saw, friends, company's PE is just 23, and it is trading at a discount to its IPO price. Company's operating profit, which is at 31% currently, is expected to rise towards 35 to 30%, because as a part of the IPO proceeding, it had cleared all its outstanding due with its parent firm, and this will result the company in the saving on the interest. So these are the strengths for the company. Weakness, 40% revenue comes from the parent firm, so it has high dependency on the parent firm. Opportunity, interest savings. As I stated, it has opportunity to increase operating profits by saving on the interest, high revenue growth potentials. If the company is able to successfully launch new complex APIs, if the company is able to successfully expand its CDMO business, then it has high revenue growth potential. Trades, any negative observations or any import alert from global regulatory authorities can dampen the sentiment for this company and can have impacts on its revenue as well as profit. Now, $1,000,000 question, friends. Is company worth an investment? Should you invest in the company? So friends, as usual, my suggestion is study the annual reports, attend the conference calls, assess your financial risk and profile, assess your financial goals. You need to make your own narrative and then decide whether you want to invest in this company or not. If you ask me, as I stated earlier, the company is definitely trading at undemanding valuations and the future growth prospects are bright. So if you have horizon of 3 to 5 years or more, then as a long-term investor, you may think this company, this mid-cap company as a part of your portfolio. But again, this is not a recommendation. You need to do your own analysis to decide whether you want to invest in this company or not. So friends, with this, we come to the end of this analysis on Glenmark Life Sciences. Thanks for watching this video. And friends, don't forget to like this video and subscribe to my YouTube channel. If you have any comments, please provide your comments, which will help me to improvise further. Thanks a lot. Stay healthy, stay safe. Take care and happy investing.